Hey farmers, this article is for you. When farmland becomes an asset class, how capital, policy, and land ownership intersect. Living the living near the Iowa-Illinois border, farmland is something I see every day around Dubuque. Land values have climbed to levels that many working farmers simply cannot compete with. According to the 2025 Iowa State University Land Value Survey, the statewide average farmland value reached $11,549 per acre, while Dubuque County was estimated at about $13,677 per acre, well above the state average. That raises a serious question. If farmland is becoming increasingly expensive and increasingly owned by investors rather than farmers, what does that mean for the long term independence of the people who actually produce our food? To understand that question, we need to look at three systems working together: the financialization of farmland, the rising cost and investor demand for agricultural land, emergency authorities that can influence food and agriculture supply chains. None of these elements alone proves a conspiracy, but when reviewed systematically, they show how power over food production can gradually shift away from independent farmers. The financialization of farmland. Platforms like AcreTrader represent a growing trend, farmland being packaged as an investment product. Instead of a farmer buying land directly, the property is placed into a legal entity, often an LLC, and investors purchase shares or interest in that entity. The farmer typically becomes a tenant operator, paying rent to the ownership structure, while investors pursue returns through rent payments and long term land appreciation. In simple terms, capital enters, farmland becomes an asset, outside investors compete for land, ownership and operation separate. The farmer works the land, but someone else owns it. Why investors are so interested in farmland? Farmland has several characteristics that make it attractive to investors: long term appreciation, inflation protection, stable demand for food, relatively low correlation with stock markets. USDA data shows U.S. farmland values average $4,350 per acre in 2025, rising 4.3% from the previous year. From a portfolio perspective, farmland can look like a stable real asset. But from a farmer's perspective, that same investor demand can raise the cost of entering or expanding farming operations. Iowa, a real world example. Iowa is one of the clearest examples of this dynamic. The 2025 Iowa State Land Value Survey reported statewide averages of $11,549 per acre, Dubuque County about $13,677 per acre. Iowa State researchers note that farmland values are influenced by expected farm earnings, interest rates, grain prices, crop insurance guarantees, limited land supply, investor demand. This means the markers farmers compete in is not shaped only by agricultural profitability. It is also shaped by the demand of outside capital. Platforms like AcreTrader did not create Iowa's land prices by themselves, but they are a part of a broader system that allows investors to participate more easily in farmland ownership. The ownership shift. Another important factor is who owns farmland. USDA research shows a large share of U.S. farmland is operated by tenants rather than owner operators. A significant portion of rented farmland is owned by non operator landlords rather than by the people farming it. When ownership moves away from working farmers toward investors and absentee owners, several things change. Farmers take an operational risk while owners receive rent and appreciation. The farmer carries risks like weather, input costs, equipment expenses, market volatility. The investor carries financial exposure but does not directly bear the daily agricultural risk. Over time, this can shift bargaining power toward capital. How capitalist ventures typically evolve. This farmland tends to follow a broader economic pattern that has appeared across many industries. Step 1. Identify a basic human need or scarce asset. Step 2. Convert it into a financial product. Step 3. Attract outside capital by promising returns. Step 4. Increase competition for the underlying asset. Step 5. Separate ownership from usage. Step 6. Normalize dependence through rents, contracts, or service relationships. Step 7. Concentrate leverage in times of economic stress. This pattern has occurred in housing, infrastructure, and natural resources. Agriculture land is now moving through the same financialization process. The policy layer, emergency supply authorities. Another layer often overlooked is how governments manage critical resources during national emergencies. Under the Defense Production Act, The federal government can require priority performance of contracts and allocate key materials, services, and facilities for national defense purposes. USDA regulations implementing that authority through the agriculture priorities and allocation systems covering areas including food resources, food resources, food resource facilities, livestock resources, veterinarian resources, plant health resources, farm equipment distribution, commercial fertilizer distribution. This does not mean the government can arbitrarily confiscate farms. However, it does mean that the state has legal authority to direct production priorities and supply chains in certain emergency conditions. When essential resources are involved, control over logistics and supply can matter as much as ownership itself. Why ownership still matters. This is where farmland ownership becomes critically important. A farmer who owns land typically has collateral, generational wealth, long-term operational security. A farmer who rents land operates under more uncertainty. Lease terms can change, land can be sold, and investment decisions become harder when tenure is not guaranteed. As farmland ownership shifts towards investors, the independence of farmers can weaken even if the farms themselves remain productive. The political dimension. Public scrutiny of farmland investment has also increased when political figures are connected to investment firms involved in that sector. For example, reporting has shown that J.D. Vance previously disclosed investments connected to Acre Trader through venture capital networks, including his firm, Narya Capital. I might have butchered that. This does not prove wrongdoing, but it highlights how political leadership and financial investment structures can intersect in sectors tied directly to national food production. When policymakers are connected to investment structures that benefit from farmland financialization, it naturally raises questions about whose interests are being prioritized. A balanced reality. Farmland investment is not automatically harmful. In some cases, outside capital can help farmers expand operations, keep land in production, provide liquidity for landowners. However, the long-term risk emerges when owners become increasingly separated from farming itself. If farmers gradually lose the ability to own land while investors accumulate it, the agricultural system begins to resemble a tenant model rather than a system of independent producers. So the conclusion is this. Farmland financialization does not require a conspiracy to create risk. The structure itself creates pressure. Farmland is finite. Investor capital is scalable. Land prices rise when outside demand increases. In places like Dubuque County, where farmland values already exceed $13,000 per acre on average, even small increases in investor demand can make a meaningful difference. The question is not whether farmland should ever attract investment. The real question is whether America wants its food system built primarily on independent farmers who own land or operators who farm land owned by financial structures. That choice will shape the future of agriculture more than any single company, platform, or political figure ever will. I hope that really gives you a very systematic view on how this works. And for everyone who lives in Iowa and Illinois or really anywhere else in America, I think that you should go to my X at William Bass 358 and take a look at this article yourself. I list all the sources underneath the article. I just think that everyone should be making an informed decision instead of just making decisions based upon how they feel or being pressured into them. Love you guys. Yeshua is King.